Hello. Today I'm going to talk to you and explain how I got my company, the New Heritage Doll Company, our APV up from the beginning APV of 345 in 2009 to 665.31 in 2014. As you can see, my revenue by division, retail is the biggest. I got most of my revenue from there. After retail, production, and then following was licensing. I'm going to now go through and explain just a few of the projects I decided to invest in for my company. In 2009, I decided to invest in the Match My Doll clothing line. As you can see, it's a high-risk investment, but the bigger the risk, the bigger the reward in my eyes. Overall, the lifetime project cost was $5.57 million, and it took about 9.21 years for the payback period. Although that seems like quite a while, the NPV of 9.17 and the internal rate of return of 22.24%, I thought it was a pretty good investment. And I also got a discount rate of 7.85%. Now if we go down, we can see that our depreciation, our net income is increasing, and also our depreciation is increasing. So when your depreciation follows your revenue in an increasing pattern, that's typically a very good sign of a good investment. If we go down to our ending cash balance for this specific investment, you can see that it just steadily increases throughout the years, meaning that we're just going to keep making money off of a project that we invested in. Another project that that I want to talk about now is our doll houses with miniature dolls. I selected this in 2013, so right before our cutoff year. It is a high risk, once again, high risk, high return. The lifetime project cost was a little less than the one before. It's $4.73 million, but I also have a discount rate of 7.85 again. The payback period on this one is a little shorter, only 7.74 years, and our internal rate of return is 28.99%. If you go down, you can see everything listed here. It's a pretty good investment to make, honestly. We go back down to our depreciation once again. This one, it's a little stagnant the first few years, but eventually it picks up and starts raising along with the net income. So as long as they're going up together, it's a good investment. And our ending cash balance, it increases quite a bit in the first couple years and then just slowly until it starts jumping quite a bit down here. So it's a pretty good ending cash balance for us. Just keep increasing throughout the years, and as long as the company keeps going with it, it's going to just keep increasing, making more money, more revenue, more net income for us. Another project that I worked on was our Dolls of the World initiative. Once again, another high-risk investment. We selected this one in 2012 with a lifetime project cost of 7.11. The payback period again was pretty long, 9.91 years. Discount rate still 7.85. And internal rate of return was 21.84, so a little lower than the other ones. And our NPV, of course, was 9.63. We scroll down once again. We're going to see our gross profit here. It just increases every year steadily and that's a great sign. We don't want our gross profit to be negative. And of course, keep going down to our depreciation. Once again, it also increases with the revenue, so everything just increasing. It's a pretty good investment here. Our ending cash balance increases quite a bit from the first year from 0.56 all the way down to 0.99. Pretty good cash balance there. Okay, scroll back up. Let's find a project that wasn't not quite as risky. I invested in the replacing the assembly equipment at Sacramento facility. I figured keep our workers safe. This was a low risk. We knew that it was going to be pretty easy in and out kind of deal. The lifetime cost was only 0.08, so really it doesn't cost much at all. And the payback period of 3 years and the discount rate of 7.85, and our internal rate of return was 38.64% and an NPV of 0.06. So really this was a pretty big no-brainer. Might as well replace some assembly equipment, makes a little bit of money, didn't cost too much to do. See our gross profit, just steady zero. Our net income though, it does decrease after, well, it just levels off after a while. I mean, there's only so much you can do when replacing an equipment. And then of course we'll go down to our depreciation. Yep, just like the other one, just kind of levels off eventually. It's not as intriguing, zero. So it's not the best investment I could have made, but for the little amount of money and the little return, bigger return on a little amount of money, really not that bad of a project to invest in. If we go to our project updates here, you can see all of the projects I invested in throughout the years. We have 4 the first year, then I just did 3 the next couple years. But in 2012, I had a little bit of money left over from just kind of taking it easy in 2010 and 2011. And I decided to invest in 5 different projects in 2012, which I think that's kind of what boosted my APV to such a high number because of these 5 right here. And then of course in 2013, just really boosted it out the roof. These 3 projects were 3 of the best ones I invested in, I think. Now if we go to our income statement, our balance sheet, you can see that our income for the projected years it increases by quite a bit. It decreases in 2016, which you can see here. But if you keep going up, you can see that it starts jumping quite a bit throughout the years. All the way from in 2020 to 2024, you jumped 8, almost 10 more up. So those investments really kick-started for our company here. If we go down to, our net income just increasing steadily. Our gross profit also, everything's just increasing, which is what we wanted it to do. Now if we go back to the dashboard, we can see that of the annual budget there's 0.09 used and we still have 8.23 million available. So we could go back through and keep investing throughout the years, and the more money that we continue to make off other projects, the more money will continue to go in our annual budget. If you see here, you can see in our total assets by division, even though revenues by division, retail was by far the biggest, or our most money-making area. But if you go down to our total assets of division, you can see that we have our most assets in our production department. And that's because I focus on investing in projects that would really set us up for the future. So when we have production high, that means that we have enough, we have more warehouses and projects that we can continue to invest our time and our effort into throughout the years. And that's really, well, we can go to our historical finances here. And you can see that even throughout the projects, in 2009 we had an 8.2 million net income. And by 2014, in only 5 short years, that net income went all the way up to 15.48. That means we made some pretty great investments here. Our gross profit before taxes, really, it's just also increases all the way from 21.60 to 48.13. And down to our total net assets, 35.97 in 2009. And then in 2014, our current year, it's 43.53. That's a pretty large jump there. Okay, and back to the dashboard here. As you can see, our company really did make some great investments, and I really think it set our company up great for the future and how we're just going to keep continuing to grow and make money. All right, thank you.